All right, ladies and gentlemen, hello. My name is Darison Joskis, and I'm the Chief Market Analyst here at Markets.com. And I just wanted to share with you this little piece, this little technical piece on dollar index. Look, as you know, on last Friday, we got the NFPs, the long awaited ones, and those were a little bit of a disaster, in my opinion, because, look, I'll quickly go through those and then we can jump into the US dollar. Basically, non farm payrolls came out at 73,000, which is already was on the lower side from the expected 110K. But the problem was not even in that. The problem was in this, in the 14K, because the previous number was at 147, if I'm not mistaken. So basically, somebody's calculating it incorrectly. And we have been in these situations before when the revised figures either much, much lower or much, much higher. I mean, this is sometimes a little bit of a difficulty, because again, how can you trust the data then? So and how can we say that, for example, this is now correct, the 73K? Maybe going into next month, it will be like 200,000 or whatever. So that's what I'm saying. So okay, unemployment ticked up as expected, but okay, that was priced in already. The market wasn't kind of taking that into consideration. Same story with our average hourly earnings. And okay, they ticked up higher here on the year on year, but that's not a major issue. The major issue still remains the NFP. And this is what the market didn't like on Friday. We saw some major sell off here. And of course, this kind of also puts the Fed at the spot where they will say that, or should say not they will say, but the one that kind of it continues to pressure the Fed will say that, here you go, we need to save the economy, we need to lower the rates, as we were saying. So look, I think that the Fed is doing what it's doing, and I think so far it's the correct way. We don't need to rush, because again, there's a lot of factors to consider. I mean, there's like the same tariffs. I mean, are what kind of an effect these are going to get? So okay, we're going into September. We're pricing in an 80% probability for a cut in September. So let's see how that's going to play out, because during last week's Federal Reserve interest rate decision on Wednesday, it kind of, during the press conference, it kind of looked that the Fed is not really willing to go for that cut. But now, given the data, I think that the Fed will give the White House what they want, basically. So, and that's where the weakness in the U.S. dollar is coming in. And look, after such a great move, we were thinking that we're going to go and stay above that 100 level. No, but we just ticked the 100 level, and boom, we sold off. Now we're resting on the 50-day EMA. So basically, if we do drop and stay below it, yes, further declines are possible. However, I think I'll get a little bit more excited with the downside if we do clear this little short-term upside support line taken from the lowest point of July. Then potentially more sellers could join in. But at this point, look, I'm not rushing into things, of course. What I'm saying is that keep your eyes on that 50-day EMA here shown as the green line. If we do fall below it, I'm going to lean a little bit more towards the downside, towards this upside line, and then we'll just kind of take it from there. So, look, in general, the indices are not feeling the love as well. However, we're seeing the cash index right now. I did this before. I'm recording this before the market opened on Monday, and we're seeing a little bit of a retracement. However, still the problem remains that not everything is good in the labor market as it seems right now. Let's see if the market can kind of shrug it off. But looking at the currency pairs, USD JPY, yes, the Japanese yen is kind of picking up interest again, and yes, we're seeing. So basically, for the BOJ, that rate hike is not needed yet. We're just getting that naturally. This is what I also was saying in my webinars, which you can always join. That I think the BOJ, although they would like to go for a hike, I think that they're keeping that tool for a little bit later. because I think what they were hoping to see is that if the stock market reverses a little bit to the downside, then JPY could get picked up automatically. USD CAD, beautiful retracement back down here after testing the 200-day EMA or the area near that. So if you're looking for some higher levels here on this one, break above that 200-day EMA would be required. For the downside, a drop below the 50-day EMA would be needed. And USD CHF very quickly. Yep, just basically following DXY, what it's doing. But there is still hope for the bulls. However, look, I'm not rushing into things yet on this one. And Euro USD very quickly, beautiful retracement back up. Of course, logical because the DXY did drop. But most importantly here, we pushed back above the 50-day EMA and this 1.1556 territory. So if we continue to trade above this, and so far it seems that we are, then there is a chance for this one actually to drift a little bit more to the upside, maybe towards this downside line, which is a little bit on the tentative side, don't get me wrong, but still I'll keep that in for now. This downside line is drawn from the highest point of July. So we'll see if we can reach down, and then we'll go from there. Ladies and gentlemen, I hope this helps. It was just a very quick technical piece here on US dollar and US dollar pairs. So hopefully you found it useful. Thank you very much. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I'll see you next time. Bye-bye.